Hello students, welcome to Crack Grade B online learning platform. Today in this video lecture we are going to discuss 50 most important MCQs in 20 minutes we will cover, and these questions are based on the finance, which is very important topic for SEBI Grade A exam. All 50 questions are very important for the SEBI Grade A exam. We will cover in the shortest possible time, and these questions PDF will be available on our Telegram channel and social media platform. So we will start the questions. So first question, debenture trustees are regulated by. First you must be aware about the what are the debenture trustee. Debenture trustee is the intermediary, means they play an intermediary role in between the investor or who invest in the debenture, means debenture holders, and between the issuer, the company who issue the debenture holder. In detail you can read from the PDF. We will not discuss in detail. So SEBI is the right answer. SEBI is the regulatory body for the debenture trustee. Second question, it refers to a market where securities are traded after being initially offered to the public or listed on the stock exchange. Primary market, secondary market, money market, forex market. Easy answer, secondary market, where securities are traded after being initially offered. So third question, a type of preference share on which dividend accumulates if remains unpaid. Cumulative preference share, cumulative convertible preference share, non-cumulative preference share, participated preference share. So first option is the right answer. In this case, what happens? It is a type of preference share on which dividend accumulates if remains unpaid. So when a company does not make enough profits in a year to pay dividends, they pay cumulative dividends in the following year. All areas of preference dividend have to be paid out before paying dividend on equity shares. So in detail you can read about the preference share in this description. So fourth question, what is the maximum brokerage that a broker can charge? So 0.5%, 1.5%, 2.5%, 3.5%, none of these. 2.5% is the right answer. As per NSE and BSE, a maximum brokerage that can be charged is 2.5%. STT stand for Securities Transaction Tax. The fund and securities pay in and pay out are carried out on T plus 1 day, T plus 2 day, T plus 3 day, T plus 4 day, none of these. So T plus 2 day is the right answer. As per the rules, settlement cycle is done on T plus 2. The selling of a stock that the seller does not own at the time of trade, means you don't have bought any stock and that you can sell that first and later on you can buy that. So that is called short selling. It has been set up a separate trading platform to benefit such small and medium sized companies. Beam, Bolt, BSC, Indonext, Ecobear. So BSC Indonext is the right answer. BSC Indonext has been formed to benefit such small and medium sized companies. Beam is the BSC E-Agriculture Market Limited. India's premier and most diversified exchange and the world's fastest stock exchange has launched an electronic spot platform for agriculture commodities. It was recently in news, so it is also important. BSC Agriculture Market Limited. It is the process of converting the organization structure of the stock exchange from a non-corporate structure to corporate structure. Corporatization, demutualization, securitization, A and B, and none of these. So corporatization is the right answer. Means a normal is a stock exchange which is having normal structure, which is not a corporate structure like board of directors, shareholders. Then converting that stock exchange into a corporate structure is called corporatization. So demutualization is also referred here. MHK Kania committee recommended the corporatization and demutualization of stock exchange in India. Sometime it is also referred as C and D related to stock exchange. So you have to take care of this thing also. Next question, these are the contracts to buy or sell a specific underlying currency at a specific time in a future for a specific price. Currency futures, options, forwards, A and B, and none of these. So currency futures is the right answer. Next question, a contract which drive its value from the price or index of prices or underlying securities. Call money, T-bills, forwards, derivatives. Derivatives is the right answer. It is a type of derivative contract which gives the buyer, holder of the contract, the right to buy, sell underlying asset at the predetermined price with or at the end of a specific period. Option, future, forward, A and B, and none of these. So option contract is the type of derivative contract. So if you want to learn derivatives in layman language, then videos are available on our YouTube channel. Next question, the future contract based on an index, the underlying asset being the index future, index fund, IDR, Indian Depository Receipt, forwards, none of these. So index future is the right answer. The removal of securities of a listed company from a stock exchange, it is called dematerialization, rematerialization, destatementization, restatementization, delisting. Delisting is the right answer. Actually, the term delisting of security means removal of securities of a listed company from a stock exchange. It can be done in two ways. First one is voluntary, and second one is forcefully, that SEBI sometime can, as a penalty, can ask the company to delist their security. So next is Miss Minu is a salaried employee. In the month of April 2018, she purchased equity shares of SBI Limited and sold the same in December 2018. In this case, applicable tax rate. So it is about the short-term capital gain and long-term capital gain. It is also very important topic. So 10%, 15%, 20%, 50% is the right answer. As the Miss Minu has purchased the share in April 2018 but sold them in December 2018, means holding period is less than 12 months, and share will be treated as short-term capital assets. In short-term capital asset gain, for short-term capital gain, there is the two conditions: when securities transaction tax is not applicable, when securities transaction tax is applicable. So in this scenario, as per your income tax slab, based on your total income, and in this scenario 15%. So it is the case of security transaction tax, so 15% is applicable in this case. Next, STT stands for, it is again here question, security transaction tax, and there are different tax slab for STT on future transaction, option trade, as equity shares. So the performance of a particular scheme of a mutual fund is denoted by share price, premium, unit value, NAV, so net asset value. The amount or fee charged from an investor while entering a scheme or joining the company as an investor. Entry load, exit load, expense ratio, premium, none of these. So right answer is entry load. So it was banned by SEBI in 2019. Sorry, 9. Exit load is a fee on an amount charged from investor for exiting or leaving a scheme of the company as an investor. So these are the difference, and is given in the bit open-ended scheme and closed-ended scheme. So you can go through the detailed document for details. These schemes offer tax rebates to the investor under specific provision of the Income Tax Act. Equity linked savings scheme, growth equity oriented scheme, balance or hybrid schemes, income or debt oriented schemes. So right answer is equity linked savings schemes. These schemes offer tax rebates to the investor under specific provision, and mainly these are in 3 years lock-in period. Second one is Rajiv Gandhi equity scheme, saving scheme. The scheme provides both growth and regular income, such invest both in equities and fixed income securities in proportion. So growth or equity oriented, two times we have mentioned it here. Balance or a hybrid scheme, income or debt. So balance hybrid scheme is the right answer. These are the different type of schemes we have given in detail. You can read through the document. Next question is, one puts in a small amount every month that is invested in a mutual fund is called SIP, EMI, ECS, NAV. So SIP, systematic investment plan, is the full form. Who manages the mutual fund by making investment in various type of securities? AMC, trustee, custodian, trust. So AMC is the right answer. Asset management company is the who manages the mutual funds. Details you can read from the document. As per SEBI regulation, every application form for new fund offer should be accompanied by KIM, SID, SINAV. So KIM is Key Information Memorandum is the right answer. Actually, Key Information Memorandum is a summary of SID and SAI. SID is Scheme Information Document and SAI is Statement of Additional Information. This both means offer document. SID and SAI is the in combination is called offer document. That is, and in KIM summary of these both documents is provided to SEBI with the application form for the fund offer. The ownership of the asset or the income from the asset is not transferred except that in default of the ownership of the asset or the income from the asset is not transferred except that in default or repayment of loan the asset may be sold or realize its value. It is called hypothecation. Next is the process by which securities of a deceased account holder are transferred to the account of surviving joint holder, nominee, legal heirs of the deceased account holder. So it is hypothecation, rematerialization, restatementization, transmission. So transmission is the process. The conversion of mutual fund unit held in physical form, statement form, into electric form, demat means demat form. Hypothecation, rematerialization, restatementization, transmission. So destatementization is the right answer. Destatementization is the conversion of mutual fund units held in physical form to electronic form. That is called demat. And restatementization is the reverse of this one. Destatementization and dematerialization is the process of converting physical certificate of equal number of securities in electronic form and credit into the investor's account with reserve depository participants. Means physical form of share will be converted into demat form, and rematerialization is the reverse of dematerialization. Next question is SFIO is a multidisciplinary organization consisting of experts in the field of accountancy, forensic audit, law, information technology, investigation, company law, and capital market taxation of detecting the prosecuting of or recommending for prosecution white collar crimes fraud. Which ministry controls? MOCA, Ministry of Corporate Affairs, Ministry of Finance, Ministry of Home Affairs, MSME, none of these. So Ministry of Corporate Affairs is the right answer. SFIO is a multidisciplinary organization under the Ministry of Corporate Affairs. So Serious Fraud Investigation Office is the full form, SFIO. So you can read the details from the document. A fugitive if economic offender is a person against whom an arrest warrant has been issued for committing an offense counterfeiting government stamps or currency, check, dishonor, money laundering, transaction, defrauding creditors, and the value of the offense is at least 100 crore, 200 crore, 500 crore, 1000 crore, 200 crore is the right answer. Details is given in the document. CP, commercial paper shall be issued in diminution of rupees and multiples thereof. So 1 lakh, 5 lakh, 10 lakh, 15 lakh. You may be aware that 5 lakh is the right answer. Details are given below. CD, certificate of deposit shall be issued in denomination of rupees 1 lakh, 5 lakh, 10 lakh, 15 lakh. So 1 lakh is the right answer. Details is given. And the corporate must have a tangible net worth of not less than, as per the latest audited balance sheet for issuance of non-convertible debentures with original or initial maturity up to 1 year, 1 crore, 2 crore, 4 crore. So tangible net worth must be 4 crore. Also this one is a condition is similar for CP, commercial papers and certificate of deposit. Minimum tangible net worth must not be less than 4 crore. Details you can go through document. In FIMMDA, D stand for deposit, derivatives, duration, debenture, none of these. Derivatives is the right answer. Fixed income money market and derivative association of India. Actually, it is an association of banks, financial institution, primary dealers. Earlier, it used to regulate this fixed income money market, government securities, but now FBIL, Financial Benchmark India Private Limited, is currently doing the job of FIMMDA. It is a financial contract between two parties of to exchange interest payment for a notional principal amount on settlement date for a fixed specified period from start date to maturity date. FRA, forward contract, future contract, currency future. So forward rate agreement is the right answer. A is the right answer. The agreement where one side pays the other a particular interest rate or fixed or floating, and other side pays the other a different interest rate, fixed or floating. FRA, IRS, future contract, currency future. None of these. Interest rate swap. IRS is the right answer. So these are the details given in document. You can read from the document. Which of the following is called plain vanilla swaps? Fixed versus float. Float versus float means fixed interest versus floating interest rate. Floating interest rate versus floating interest rate. Fixed interest rate versus fixed interest rate. A and B. So fixed interest rate versus floating interest rate swaps are called plain vanilla swaps. Which of the following are called gilt edge instruments? Government securities, commercial paper, certificate of deposit, non-convertible debenture. So these are the securities which are highly safe. There is no risk of default, that is called gilt edge instrument, that are government securities. So 35 answer is A. Next question, these are the bonds, the principal of which is linked to an accepted index of inflation with a view to protecting the principal amount of the investor from inflation. Fixed rate bond, floating rate bonds, capital index bond, inflation index bond, none of these. So capital index bond is the right answer, in which principal amount of that bond is linked with the index of inflation, and in inflation index bond both are principal and interest both are linked with the index of inflation. So in details you can read from this document. Which of the following is not tenure of T-bills? You may be aware about 14 days, 91 days, 182 days, 364 days. So 14 days is not the tenure. Currently 91 days, 182 days, 364 days are the T-bills maturities. It is simply the interest rate that every debenture bond carries on its face value and is fixed at the time of issuance. Coupon rate, bond rate, debenture rate, currency rate. So coupon rate is the right answer. The yield or return on the instrument which is held till its maturity is known as coupon rate, bond rate, debenture rate, currency rate, or YTM, yield to maturity. So yield to maturity is called the yield or the return. Which of the following is not true about FCBB, foreign currency exchangeable bond? Question was asked in the SEBI 2018. FCB is a bond expressed in foreign currency. It's right. The principal and the interest in respect of which is payable in the domestic currency. It is not right. FCB are the issued by an Indian company. It is right. FCB are subscribed by person resident outside India, means FCB are actually the money is raised from the foreign country only. FCB are exchangeable into equity share of another company being offered company which is an Indian company. It is also right. So it is always principal and the interest is always payable in foreign currency. Details are given here. Also, the guidelines for FCB is issued by the Ministry of Finance. Which of the following is an exotic derivative? Options, futures, forwards, A and B, none of these. So forwards are the mainly exotic derivatives, are the non-standard documents which are traded over the counter, that are forwards. So anchor investor means a qualified institutional buyer who makes an application for a value at least rupees in a public issue on the recognized chain exchange, stock exchange other than SME exchange made through the book building process, 1 crore, 5 crore, 10 crore. So anchor investors can are those who make at least 10 crore application in a public issue. So allotment in both public issue and right issue is proposed to be made simultaneously is called right issue, private placement, composite issue, ADR issue, FPO. So the composite issue is the right answer. An option of allotting equity shares in excess of the equity share offered in the public issue as a post-listing price stabilizing mechanism, green shoe option is the right answer. An IPO issuer should have minimum net worth of at least rupees in each of the preceding 3 full years, 1 crore, 5 crore, 10 crore, 25 crore, 50 crore. So 1 crore is the right answer. These 6, 7 questions we have already discussed in our videos. For IPO, the minimum promoter contribution shall be in lock-in period for 1, 3, 5, 7, 10. So 3 years is the right answer. In an issue made through the book building process, the minimum net offer to be made to retail individual investor 15%, 25%, 35%, 45%, 55%. 35% is the right answer. In an IPO issue, the value of allotment to an employee said don't exceed rupees 1 lakh, 2 lakh, 4 lakh, 7 lakh, 10 lakh. 2 lakhs, but in certain exceptions are there that you can read from the document. In the event of non-receipt of the minimum subscription, all application monies received shall be refunded to the applicants not later than 15 days, 20 days, 30 days, 45 days, 60 days. So 15 days is the right answer. Otherwise, have to pay the penal interest at the rate of 15% per annum. It is an offer of document used in case of a book built public issue. It contains all the relevant details except that of price or number of shares being offered. It is filled with the ROC registrar of companies before the issue open. Red herring prospectus, draft offer document prospectus, letter of offer, sell prospectus. So red herring prospectus is the right answer. These were the 50 questions, very important question, and many questions linked to these questions are given in the explanation part. So you can cover many questions from there. So these are very important. You must go through this document and share with your friends who are preparing for this exam. Also share this video, like our YouTube channel, and provide feedback about the questions. And we are trying to provide you the most important content, and we are providing in very less time so that your time will not be wasted. Thank you and happy learning.